Good morning, everyone. Welcome to VANIKIAS, Vanik Smart Plus. Today, we are going to discuss something important about economics uh, for our Odisha service, civil service examination, as well as it will be helpful for your preparation in UPSC civil services. Myself, Nishant Shukla, a warm welcome to everyone. Let's start our today's fruitful session. Please look into the question, try it, and then we will see one by one detailed explanation of every question's solution. Okay, let's roll on. First question. Which of the market which of the following is correct about derivatives market? Derivatives market. Which of the following is correct about derivatives market? Market where participants trade in commodities and future contracts for delivery. Market involves contracts whose value is derived from the market value of the underlying asset. Futures, options, contracts for difference, forward contracts are suitable examples of it. Both A and B. What will be its answer? Take a time. The correct answer will be both A and B. Both A and B will be the correct answer. Market where participants trade trade in commodities and future contracts for delivery. What type of this market is called? What type of market? Do you know what type of market this is called? This is called future market. Future market. Today our topic of discussion is Indian financial system. Indian financial system is today's our topic of discussion, where we'll be looking after certain good questions revolving around good questions of this chapter, which is also a very important chapter for our exam. Market where participants trade in commodities and future contract for delivery is called future market. What is derivatives market? Market involves contracts whose value is derived from the market value of an underlying asset. That is called what? This is called derivatives market. Future options, futures options, contract for difference, forward contracts are good examples of derivative market. This derivative market is regulated by market price, regulated by of market price of the items, the goods. Okay, next question. With reference to convertible bonds, convertible bonds, consider the following statements. As there is an option to exchange the bond for equity, convertible bonds pay a lower rate of interest. Point number one. The option, point number two, the option to convert to equity affords the bondholder a degree of indexation to rising consumer prices. What will be its answer? What will be its answer? The answer will be 1 is also correct, 2 is also correct, both 1 and 2. Now what are convertible bonds? What are convertible bonds? First, write about convertible bonds. Convertible bonds are those bonds which pay fixed amount of interest payments, fixed amount of interest payments, but can also be converted into a predetermined number of stocks slash shares. Okay. Convertible bonds are also they are also hybrid in nature. What does hybrid in nature means? They can be both converted into equity as they can also remain in form of bonds. The option of getting these bonds converted to stocks carries a condition of what condition is carries? That it will be have a lower rate of interest because of its convertibility and hybrid in nature. Can be converted into equity, but it will carry a lower rate of interest. A lower rate of interest. Okay. Next, identify the correct sequence of steps to be followed in trading procedure at the stock exchange. Opening a trading account, demat account, placing an order, settlement of order, execution of order. Next, settlement of order, opening a trading account, demat account, placing an order, execution of order. Opening a trading account and demat account, placing an order, execution of order, settlement of order, placing an order, opening a trading account and demat account, execution of order, settlement of order. These are the 4 options given to you. What will be the correct sequence? The correct sequence will be option number C. The correct sequence will be option number C. First, he will open a trading account or demat account. What is demat account called? This is the paperless account. Paperless account. It is also called as what? Dematerialized account. Dematerialized account. Dematerialized account. Okay, next question. First, okay, let me explain how it generally happens. First, what will happen? You have to open a demat account, then you will place the order just like normal. You will place the order of what you want to buy. Then third, there will be an execution of order, like the order will be set, the order will be executed. How many days do they take? How many days do they take for settlement? And yeah, for contract issue 24 hours. Then what? It is T plus 2 days. T plus 2 means on the time, on the particular day of transaction, plus 2 days for settlement of it. On the date of transaction, after 2 days, generally after 2 plus day, T plus 2 days, there is settlement of order, and then the particular account will show, then the particular transaction will the particular transaction will show in your demat account that the shares has been credited to your account. T plus 2 days is called transaction plus 2 days. Next question. So who serves as an intermediary between the investor and the depository, who is authorized to maintain the accounts of dematerialized shares? What will be its answer? What will be its answer? Who serves as an intermediary between the investor and the depository, who is authorized to maintain the accounts of dematerialized shares? And the answer will be depository participant. Depository participant. Depository participant. What is depository participant? It serves as it serves as a linking pin between investors and what depository? What is depository? The depository is called NSDL. The depository is called NSDL, or what it is called, NSDL or CSDL. NSDL or CSDL is called. What is the full form of NSDL? National Security Depository Limited. And what is CSDL? It's Central Depository Services. Central Depository, CDSL, I guess. CDSL, Central Depository Services Limited. It's CDSL, sorry, it's CDSL. Who are allowed to become who are allowed to become depository participants? Financial institutions, banks, stockbrokers, NBFCs. NBFCs are called non-banking finance companies. They can become your depository participant, who will act as an intermediary between the investor and the depository. Who will? Financial institution, banks, stockbrokers, NBFC, and there. Where is the depository? The depository is called NSDL or CDSL. The full form is National Security Depository Limited. Clear? Let's roll on. Which of this is not a part of capital receipt? Again, very interesting question. Which of this is not a part of capital receipt? Anyone? Which of this is not a part of capital receipt? The correct answer will be what? Discovery, recovery of loan, disinvestment, borrowing, tax. What will be the answer? Anyone? The correct answer will be tax. Taxation is not a part of capital receipt. What do you mean by capital receipts? These are those where cash received from the sale of fixed assets or what? Cash received from sale of companies, cash received from the sale of companies shares. What will be more? Cash received through cash received through equity, cash received through issue of debentures. Preferably you can say it what? Debt instruments. And what will be example of these debt instruments? Loans, bonds, etc. This is called capital receipts. Okay. Now, what do you mean by disinvestment? What do you mean by disinvestment? Right. Disinvestment. It is an act by the companies. Where companies, not only companies, government, what they do, they start to sell their assets or holdings, which also refers to capital expenditure reductions. What is the impact of this investment? The impact is what? It mobilizes the funds. It mobilizes the funds to more productive areas, The recent example will be Air India's disinvestment, government decision on Air India's. Example will be government's disinvestment on Air India. Right? Please write it down. Okay, we'll move to next question. Which of the succeeding are liable for the variations in the Sensex? Which of the succeeding are liable for the variations in Sensex? Anyone? Which of the succeeding are liable for the variations of Sensex? We actually left some point over here. What will be its answer? Anyone? The answer will be, it's a very interesting answer of it. If anyone knows, it will be very I mean, interesting if someone answers this. The answer will be neither. The answer will be the answer will be sorry. The answer will neither be. The answer will neither be fiscal policy, neither it will be budget, neither it will be balance of trade. The answer will be none of the above. The answer will be none of the above. Then what will be its answer? The answer will be monetary policy. The answer will be monetary policy. The answer will be monetary policy. Why? Because the higher the monetary policy, right, please write it down. The higher the monetary policy, the higher the money higher the monetary the higher the monetary policy, the higher the monetary policy, the more it will result in increased rates, which in turn will propel firms future cash movements, triggering stock prices to drop. The higher the monetary policy, the more it will result in increased rates. which will propel firms' future cash movement, triggering stock prices to drop. What is actually, what do you mean by monetary policy? Monetary policy, what is monetary policy? It is set of actions set of actions taken by set of actions taken by central banks. In case of our, it is RBI, to control overall money supply, to control overall money supply, by thereby promoting thereby promoting thereby promoting economic growth thereby promoting economic growth thereby promoting economic growth and strategies for what? Strategies for interest rates, cash flow, and other requirements. Okay. This is what it is called, monetary policy. Okay, next question. Okay, one more thing that I would like to discuss with respect to question number 6. It is always not necessary that there will be there माने सदाबले necessary नथिबो कि none of this केबे आंसर हेई परिबनी. Most of the cases रे यूपीएससी रे जदि none of the above देछि, none of the above जेति और दीटा का तीनटा का स्टेटमेंट जदि भी दिया आइछि, it will confuse you. Mind it, the examiners will always check your thorough concept, that खाली आपण मियर पढ़ी के जंती ना आपण कांसेप्ट क्लियर अछि. जदि आपण कांसेप्ट क्लियर नथिबो आपण एई जे जानि परिबेनी. बुझिले? Always none of the above answer ना हेबोनी बोली, none of the above केबे एमति था न थाए कि छाड़ ना किए देखिबो बोली कि. बुझिलो? थोरो कांसेप्ट एग्जामिनर चेक करबे पे नन ऑफ द अबव भी पके दजंती. देखो एगुड़ा केते बड़ कांसेप्ट थिला क्वेश्चन भितरे. क्वेश्चन केते छोटोटा बट कांसेप्ट केते बड़. बुझिलो? ठीक अछि. नेक्स्ट, accommodation bills are also known as what type of bills? Accommodation bills are also called as what type of bills? An accommodation bill is also called as a note, a draft. Note or draft is drawn and acknowledged by the drawer and acknowledged by the drawer and the drawee without having their consideration, and the drawee by the drawee without having their consideration, any consideration. These are these act these act okay, any issue, something with the pen? I guess the pen is not working. These act to help acts to uh, help the parties, or the concerned, help the parties to get their monetary aid, monetary help in a bill of exchange. Bill of exchange. Accommodation bills, other name are also called kite bills, wind bills, kite bills, wind bills, trade bills, bills of exchange, bills of exchange. 1, 2, 3, 4. So it is also called kite bill, wind bill. It is not called a supply bill. So the answer will be D, both A and B. बुझले? Next question. Ad hoc treasury bill are issued in favor of whom? Ad hoc treasury bills are issued in favor of whom? It is none other than RBI. It is issued in favor of RBI. Full form of RBI is Reserve Bank of India. When was Reserve Bank of India formed on the recommendations of which committee? Recommendations of Hilton Young Commission. Hilton Young Commission. Next question. Which of the following is the functions of financial market? Which of these is a function of financial markets? 1. Mobilization of savings. 2nd, price fixation. 3rd, providing liquidity to financial assets, or all of this. Which one of the above will be the correct answer? Which one of the above will be correct answer? The answer will be all of the above. All of the above. There is also one more function. There is also one more function of financial market, and that is reducing cost of transactions. Reducing cost of transactions. Reducing cost of transactions. Let's see one by one what do they mean, right? Let's discuss what do you mean by mobilization of savings. Mobilization of savings means to channelize them for more productive use, more productive use. For example, for it gives productive use, thereby savings will become what? Savings will become investments in market. What is B? What is price fixation? It interacts between demand, okay, demand and supply, demand and supply of financial assets, demand and supply of financial aspects which are being traded, which are being traded. What is providing liquidity? What do you mean by providing liquidity? They facilitate what? They facilitate easy sale and purchase of financial assets, financial instruments, financial assets, right? We can write FAINANCIAL, financial assets. Thereby they will provide what? They will provide liquidity, okay, they'll provide liquidity as and when cash is needed, okay. Now, what is financial markets? Recovery cost of reducing cost of transaction. It is a one place where you can buy also and you can sell also. Thereby reducing the cost. You can save from the extra expenses. You need not to go to a particular place or particular market but to get some valuable information. There is one market where you can buy also and you can sell also. It's a market where buyers meet sellers. Next question. A rise in call money rates makes the other sources of finance such as commercial paper and certificate of deposits what expensive in comparison with banks which raises funds cheaper in comparison with banks who raise funds from these sources, creates no effect on other sources, none of the above. What will be answer? Take your time, just take a minute and the answer will be B. The answer will be B. Cheaper in comparison who raised funds from other sources. How? Here the interest paid on call money is called call rates. Basic thing. Call rates or call money call rate. There is an inverse relation. There is an inverse relation of inverse relation between call rate and other short-term money market instruments. How? A rise in call money markets makes other sorts of finance such as uh, commercial papers, CDs. CDs are what called certificate of deposits. Certificate of deposits. What they make it? They make it more cheaper. They make it more cheaper. They make it more cheaper in comparison to other funds. Comparison to cheaper in comparison to other funds. How? How? Because of their inverse relation. Because of their inverse relationship between what call money and other instruments, short-term instruments. Because the if this one gets higher, this one will get cheaper. If this one gets cheaper, this one will get higher. The other, it is a matlab, if one gets higher, the other will get lower. Question में mention अछि a rise in call money rate. A rise in call money, जदि call money जदि महंगा हे जबले बाकी सब जिनस सस्ता हे जिवो. Next question. The guild funds exclusively invest in where? The guild funds exclusively invest in where? Government securities, debentures, corporate debt, none of the above. They invest in whom? They invest in government securities. What are guild funds? What are guild funds? These are funds that exclusively invest in government securities, and they are debt funds. They are debt funds that have no risk with them. They carry no risk with them. Of what? No risk of what? Non repayment of interest or principals. Because why? Because they are always free of charge. There is no charge in government securities. ठीक है? They are always free of charge. Okay. Next question. Consider the following statements regarding repurchase, buyback of government securities. It is a process whereby Government of India and states buy back their existing shares, existing securities by redeeming them prematurely from holders. It can also be used for infusion. Mark the word infusion of liquidity in the economy. Infusion of liquidity means it increases liquidity in the economy. What will be the answer? Only one, two, both, or neither? The answer will be 1, 2, both will be the answer. What is repurchase buyback? It is a process whereby Government of India buybacks their existing securities, redeeming them prematurely from the holders. What is its objective? Its objectives can be a reduction of cost. Its objective is a reduction of cost. By buybacking them at higher rates, higher rates, thereby what it does, it 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 infuses more liquidity in the market, it infuses more liquidity in the market, more liquidity in the market by market when when the government is buying you something from you, it will take something from you and in return it will give you the money, thereby pumping more liquidity. This is called what as open market operations, open market operations, open market operations. Okay, it is also called as open market operations. Next, what is a negative bond yield? Negative, remember the word negative bond yield. Investor receives more money from the bond at the maturity than the original price for the period. No. Investor receive less money at the bond's maturity than the original price of the bond. Yes. Investor receive no money no at the bond maturity. Maturity तो किसी ना किसी तो पाइबो ना, कम बेसी तो पाई पारे बनी कारण नेगेटिव अच्छी तो it will be investors receive less money at the bond's maturity than the original price of the purchase of bond. ठीक है जी, these are called negative bond yield. Okay, next, consider the following statements regarding currency swap arrangement. It is an arrangement between two friendly countries to basically involve in trading in their local currencies. The exchange currencies is determined by market floating exchange rate. Third, so what is third? The dispute swap are settled by third party intervention. Third party intervention. What will be its answer? What will be its answer? First, rather understand what is currency swap arrangement. Then we'll look. It is an arrangement between two friendly countries who have regular substantial transactions to basically involve in trading their own local currencies. Recently, if you could have seen India, Russia, India, Iran. India, I guess, is dealing with more than 15 to 20 countries in their with their domestic local currencies, just to counter out the effect of American dollars. Counter out the effect of American dollars. This will clearly benefit the countries, thereby not getting them trading in this markets. This market is determined the floating exchange rate. Yes, these disputes swap are generally settled by third party intervention. No, it's 1 and 2 only. थर्ड पार्टी इंटरवेंशन तो होना ही नहीं है ना, क्योंकि थर्ड पार्टी इंटरवेंशन ला ही नहीं रही है. जब दो पार्टी इन्वॉल्व हो रहे हैं, टू फ्रेंडली आर इन्वॉल्व, व्हाई टू ब्रिंग अ थर्ड पार्टी? Okay, let's move on to the next question. The term side pocketing, often seen in news, is related to which of the following? Commercial banks, mutual funds, uh, skill sector or what is called self-help groups. What do you mean by that? Side pocketing. Side pocketing means, wait a minute. Side pocketing means generally it is a framework. It is a framework to separate. It is a framework to separate mutual funds assets from the from net to separate portfolios SEBI, it was introduced by SEBI, Security Exchange Board of India, headquartered at Mumbai. SEBI introduced this framework to potentially have a good NAV, net asset value, to create a good NAV. What it does, it segregates good assets from bad assets. Simply, side pocketing means dividing good assets from bad assets. Bad assets are what? Those whose NAV are not good. Okay. Next question. With the reference of green bonds in India, consider the following statements. The green bonds is a debt instrument issued for renewable as well non-renewable energy projects. Yes. Renewable. No. Both public and private sector banks can issue such bonds. Yes. It is a low risk bond as repayment is tied to the issuer rather than the success of project. Yes. What happens now? Banks are first let me clear why this is not, because it's also look after climate projects, afforestation projects. It is not only about renewable sources of energy, non-renewable energy project. It looks after every particular project. Recently, Bank of Baroda, HDFC, Bank of Baroda, HDFC, SBI, they are all issuing what? Green bonds. They are all issuing green bonds which are low risk. Why low risk? Because this money is taken by whom? This money is taken by government to issue to fund their climate projects, and in return government gives interest to banks. Government gives interest to banks, whereby bank gives the same interest to customers. It is a low risk bond. This is no risk bond, because there is direct involvement of governments. Okay, next. Which among the following is an inflation-free instrument? Inflation-free instrument. It is none other than index-linked gilt bond. What is this? Here the principal is paid. Here the principal is paid to the specified price specified price index, generally more generally it is consumer price index, C CPI, United Consumer Price Index. These bonds are to, these bond safeguard the income. They safeguard the income from income of investors by protecting them from inflation, by protecting them from inflation. Okay, next question, next and last question. In an option contract, which is known as the predetermined price at which an underlying asset has to be bought or sold. In an option contract which is known as the predetermined price, means already dictated price at which an underlying asset has to be bought or sold, it is called none other than exercise price. What is exercise price? The price at which can be bought when a trading is called out. When trading is called out for a particular asset, when trading is called out for a particular asset, underlying asset, the rate at which it has to be bought or sold is called an exercise price. Thank you. I hope you have liked the session. Please like and subscribe and share. Thank you. Take care. Bye bye.